Welcome folks, TDT Funded Coffee here. The goal of this channel is to turn you idiots into profitable idiots. And this is why I'm going to teach you today how to increase your odds of winning by using a super easy and simple method. Watching this video will also increase your winner length by at least 2 centimeters. There are many ways you can increase your odds of winning in theory, but most of those are actually leading in the wrong direction and oftentimes even end up making you more confused than you already are, or do the opposite of what you actually want to achieve. So very common for newbie traders is to add an indicator or even several indicators to their chart. After all, the more confidence you have, the better, right? This isn't necessarily wrong, but it's also not right. Adding confidence to your trading is a great way to give yourself confidence to take and also hold your trades. This is why I've created, for example, the MT4 Rise system, which you can get completely for free in our Telegram community, linked below the description. So anyway, adding confluences through indicators is a very delicate endeavor. Very fast you can get into the cycle of needing a confluence for the confluence, till you have so many potential confluences on your chart that every trade can be validated or invalidated by one of your indicators you have chosen. So the cycle usually starts like this. You're a newbie trader, you're looking at your naked chart with only candlesticks. You have no confidence in your ability to read the market, and of course, how can you be confident without having any trading experience? So now you find about indicators. They show you the trend and even can show you when to enter the market. How freaking awesome is that, right? So after eating one or two indicators, you notice how many, if not most signals of those indicators are actually outrageously bad. So what needs to be done? Of course you need to add indicators to filter out the bad signals. And there you are, having your 7th indicator on your chart, and the candlesticks are barely recognizable. You yourself have no clue what you're even looking at anymore at this point, and you start throwing all indicators out, latest after a week of trying. And the conclusion, indicators are useless. This is far from the truth though. Your initial idea was good, but then you went off the right track, losing yourself in a labyrinth. The best and simplest method to actually increase your odds of winning, doesn't matter whether you are a discretionary or systematic trader, is to use several time frames as confluence. People are trading for months and even years and never even think about using this, and that's ridiculous. Especially systematic traders should abuse this as much as possible, as there's simply no easier way to increase your win rate. A good buddy of mine who has over 30 years of trading experience told this once, and it really stuck to me. You should see your higher time frames as God. Do you want to trade against God? I certainly don't, and you shouldn't either. So, taking several time frames into account is such a strong and good way to increase your win rate because it has very little drawdown to it. The biggest disadvantage of using a multi-time frame analysis approach is that you might miss out on a few moves because they go against your higher time frame trend. But this isn't it, nothing else. So let me get straight to the advantages it has to use a multi-time frame analysis approach. First of all, you can gain a much better view of the current overall market structure and environment. Are we trending? Are we ranging? What does the current daily candle look like? A pin bar, engulfing, is support and resistance nearby, and so on and so on. Systematic traders have it even easier, and that's why I said specifically for systematic traders, this is an awesome method to increase your win rate. You simply look at each selected time frame and watch what your system says. An example would be looking at the moving average. Is the price above or below the moving average? Is the MACD showing bearish momentum or a bullish momentum? Very simple, and it just takes 2 seconds to understand which direction the current market is going for the given time frame. So what is next? First, what you need to consider is what type of trader you are. For example, you are a scalper, meaning you're trading on low time frames, holding trades only potentially for minutes. A day trader, meaning you're looking at the medium time frames, such as a 50-minute or 30-minute chart, planning to hold trades for potentially an hour or longer. Or are you a swing trader who's holding a trade for days and even at times weeks? Once you understand what type of trader you are, you then can categorize your time frames. The easiest is to start with your entry time frame. The time frame for your entries is likely the time frame which you currently use the most to take your trades on. So now we can build up on that. Now you need a secondary time frame, which is the highest time frame you will use. The secondary time frame is your so-called trend time frame. For a day trader, as an example, you would likely want to trade only in the direction of the current daily time frame trend, as you're holding your trades potentially for several hours. As a scalper, you might want to use the hourly chart, as the daily time frame might be a bit too slow for you. And so on and so on. So it really depends on your style of trading, and you likely need to play a bit around with that to get to understand where you really feel the most comfortable with. So now comes the last time frame, the confirmation time frame. The confirmation time frame, as the name already suggests, is there to confirm the trend time frame direction. So it's between the entry and trend time frame. Taking again the day traders as an example, your entry time frame could be, for example, the 50-minute chart, your trend time frame, then the daily chart, and lastly the confirmation time frame, which is between those two, can be then the hourly chart. Now that we have categorized our multi-time frame approach and split it into 3 different segments, we can directly look at an example with our MT4 rise system. To illustrate this method, I will use the swing trading approach, as this makes it much easier to process the amount of information given to you. So let's look at GBP US dollar. Personally, for swing trading, I use the following time frames: the trend time frame as weekly chart, the confirmation time frame, the daily chart, and entry time frame, the 4-hour chart. So let's take a look at our trend time frame, the weekly chart here. For our example, let's take the most recent uptrend. Why is it an uptrend? Very simple put, our moving average is colored green, the same way as our sub windows are, which all confirm this time frame is currently in an uptrend. I'm marking the start of the weekly uptrend right here, so we can see where it started on the different time frames. This way it's easier for you to follow. And this is already all you need to know for our highest time frame, the trend time frame. You notice now that as a systematic trader, you really don't need to spend a lot of time doing these analysis. There's no need to analyze the candlesticks or watch where the next support and resistance areas are. Nor do you need to do any discretionary judgment about the current trend. And again, for anyone that might be confused with what you're seeing on the chart currently, please make sure that you watch my previous video where I explain in all detail how to trade the system you see here currently on the chart. So next comes our confirmation time frame, which we have to analyze. In our case, it's the daily time frame. So here you have the confirmation of the weekly trend time frame uptrend, till up to the point when the MA is turning red, indicating an at least temporary momentum shift. Now, this is very crucial. After the MA changed its direction, the trend and confirmation timeframe are conflicted and not agreeing with each other anymore. This is the time where you need to be patient and not trade anymore in either direction. The plan is only to take trades when both the trend and confirmation timeframe are showing the same desired direction. Right after, we get again a buy signal on the daily timeframe, and we can then look for buys on our entry timeframe again. Now that we are already talking about the entry time frame, let's move to the 4-hour chart. This zone here is the now trading zone, which we just identified on the daily chart, where our trend and confirmation time frames are out of sync. Right here in this example, you see how you might have missed out on some of those sell signals, but pay attention to the market movement here. It's terribly slow and messy. In real time, this is very difficult to trade. Now look at our previous trading zone. I hope you see the difference here when comparing it to the no trading zone. This is much smoother and easier to trade price action. And again, I know I'm repeating myself, but the systematic trader does not need to do anything now, besides just taking every valid buy signal on the given chart, without looking or doing anything else. You have 1, 2, 3, 4, 5, 6, 7, 8. You have 8 long signals here that all would have worked out beautifully. And you have 2 short signals which you just like that filtered out, solely taking the higher time frame trend into consideration. So that's it, guys. We're coming to the end of this video, ladies and gentlemen, triangles and circles. It was a pleasure to teach you idiots a few things, and congratulations to the guys that have made it to here. You successfully grew your wiener by 2 centimeters. Yeehaw! Okay, seriously guys. Bye bye.